So the fintech giant Futu just dropped its latest earnings report, and in a market that's, pretty shaky, they're not just getting by, they're absolutely flying. So today, we're going to dig into the numbers and see exactly how they're pulling this off.
It's the big question, right? How does a company whose entire business is the stock market manage to do so well when things get, well, volatile? That's exactly what we're going to unpack. And Futu's recent performance is the perfect case study.
Now, if you're not familiar, Futu is the tech company behind those super popular trading apps, Futu Bowl and Mumu. And their recent story, believe me, it gives us a really fascinating answer to that question we just asked.
All right, so first things first, let's get right into the headline numbers from their absolutely blockbuster fourth quarter of 2025.
So what's the short version? They didn't just meet expectations. They completely smashed right through them. This wasn't just a good quarter. For Futu, this was a statement, a real flex of their resilience and their whole strategy. Okay, let's break this down a bit. So you can see here, analysts were expecting earnings per share of about $3.06. Futu came in at $3.07. Then look at revenue. The street was looking for around $789 million. Futu, they pulled in over $827 million. That's a solid beat on both the top and bottom lines, no question about it. But honestly, the real jaw-dropper is this number right here. Their net income for the quarter just skyrocketed by over 80% compared to the same time last year. I mean, that is an incredible amount of growth, especially when you think about the market conditions we've been seeing. And to put that into perspective, their total revenue for the quarter hit 6.4 billion Hong Kong dollars. That's a jump of over 45% from the year before. You can just feel the momentum building with numbers like these. And this is interesting. The chairman and CEO, Leaf Li, he points right to their success in attracting new users. He even highlights that they blew past their own goals for the year by a pretty wide margin. This is key. This aggressive client acquisition, it's really the bedrock of their growth right now. Okay, so what's the engine really driving all this? Well, it pretty much boils down to two key things: users and assets. So let's talk users first. Futu now has nearly 3.4 million total funded accounts. And remember, these aren't just signups. These are people who have actually put money onto the platform, ready to trade and invest. And that number is growing fast. And just look at this growth trajectory here on the chart. That's a 40% jump in funded accounts in just 1 year. Think about that. The company even called out specific areas of strength. Places like Hong Kong, where they're already a leader, but also newer markets like Malaysia, where they're really starting to gain some serious market share. And, all those new users, they brought a ton of capital with them. Total client assets on the platform are now at a staggering 1.23 trillion Hong Kong dollars. That's up 66% from the year before. Just wow. Okay, but here's a really crucial piece of context. Even though assets were way up for the year, they were actually kind of flat compared to just the previous quarter. So why is that? Well, new money was pouring in for sure. But at the same time, the value of some of the Hong Kong stocks that clients were already holding, it went down because of a market downturn. They call these mark-to-market losses. It just means the value on paper dropped even if nobody sold anything. And what this really shows is that the company is still growing, even when parts of the market are totally not cooperating. And all of this really brings us to the core of their strategy. See, it's not just about getting more users, it's about what those users are doing on the platform. So let's dig into their playbook, which is all about diversification across different products and markets. Now, this slide, this tells a really fascinating story. You see, on one hand, trading in Hong Kong stocks actually fell by 31% in the quarter, mostly because of that downturn in China tech. But on the other hand, their U.S. stock trading volumes surged 17%. So what does that mean? Their clients were actively diversifying. They were moving away from that slumping market and jumping into hot sectors like AI over in the U.S. And Futu's platform made that pivot seamless. And this really illustrates a major shift that's been happening. In the past, a lot of people just saw Futu as a way to play Chinese stocks. But just look at this breakdown of their U.S. trading volume now. Chinese EDRs, and by the way, that's just how foreign companies trade on U.S. exchanges, they now make up less than 10% of the total. This is huge. It shows their client base has really truly gone global in its interests. And to fuel all this diversification, they're not just hoping it happens. They're launching specific products for specific markets. So for example, in Hong Kong, they're offering more high dividend funds. Over in Singapore,
new local stock and bond funds. In Malaysia, they launched Sharia-compliant gold trackers, which were apparently a huge hit. And then globally, they've expanded their crypto offerings with more than 10 new coins. The point is, they're meeting investors exactly where they are. Okay, so we've seen the impressive numbers, we've seen the smart strategy, but what does this all mean for the long term? Why does this matter? Well, because Futu is looking way, way beyond just being a simple brokerage. This quote from their earnings call pretty much sums it all up. The goal here is to become a comprehensive, one-stop financial services platform. So think bigger. Think banking, insurance, wealth management, all of it, all integrated into one slick digital experience. And a huge part of this future, as you might guess, is technology. For instance, they're rolling out some really cool features like AI algo trading. So what is that? It's basically using AI to help people automate and optimize their trading strategies. It's about taking these really sophisticated tools and making them accessible to everybody. And believe me, they are putting their money where their mouth is. They're building their own in-house AI for things like summarizing news and detecting fraud. They're integrating their Airstar Bank to start offering products like mutual funds and insurance. They're also beefing up their crypto capabilities. And this part is crucial, they're hiring a lot more research and development staff to power all these new AI and crypto initiatives. So here's the big takeaway. Futu's impressive quarter isn't just some flash in the pan. It's really a sign of a much deeper evolution. They're actively transforming from just another online brokerage into a truly diversified global fintech powerhouse. Which, of course, leaves us with the big question for the future. They've used technology and diversification brilliantly to navigate a really choppy market. But as competition inevitably heats up and the markets keep shifting, the real question is, can their tech-first strategy keep them ahead of the curve? And that, I think, is what we'll all be watching.